Hey guys, look what we're changing up here. We have Stephen Guilfoyle of Sarge 986 for an interview. It's been a long time, Stephen.
It sure has. And we'll take a break this week from our Street Smarts segments, which have been rather successful. And we'll just do a plain old street interview today.
Sounds good. All right, so here's the word on the street. Looks like tariffs are, climbing into earnings, sending some negative sentiment there. I thought this stuff was already priced in.
It is to some degree priced in, but until you actually see the numbers for margin compression, I guess that is actually impacting some traders. And don't forget, the algos, they see keywords. So when they see things like margin compression, that outweighs better revenue, better EPS, better, even guidance down the road for higher revenue, which we saw in Northrop this morning, which I am long, and I've been managing that position all day, but Northrop got run over hard.
But the stance on trade, I mean, it seems like there is some sort of a situation here. Why are some companies like Facebook and BlackRock getting more exposure to China?
The companies that will go that route right now are either placing a bet or maybe they just don't feel they're that exposed. Now, Facebook, they report tonight. I'd be a little afraid of going into Facebook if I didn't already have a stake that was already in the green with a new equity stake. That name I will probably play from the option side. I'll probably sell a put and a call that is so far out of the money, just trying to make a couple bucks here and there, that hopefully it doesn't touch either side.
Okay, so that's called a strangle, am I right?
Yeah, that's a strangle. I'll be
who is on with their options knowledge? Thanks to this one, of course. Okay, Stephen, since you are our homie, we do have some housing data this week, but you're saying it's more of a demand thing, not a supply thing, like everyone else is saying.
Well, general knowledge seems to be that it's a supply situation, but the numbers out of California were so weak, and the numbers are so soft across the board for almost every slice of the data that I think you got to start to wonder: is it a price thing? Is it price point that matters? And we'll see the Case-Shiller pretty soon. I'd like to see, that actually lags a month behind the other data, but I would love to see the Case-Shiller for this month and for last month, just to see if it is price that is impacting more so than anything else. And I wouldn't blame the consumer in uncertain times if they would back off because of that.
All right, how about the end of the week? GDP, what about that number?
Oh, it's so interesting. All right. Oh, yeah. GDP consensus is about 4.1, 4.2%. We never hit it 4, right? Well, some people are talking 4.7, 4.8, even 5%. Interestingly, today, the 5-year note auction, $36 billion worth of 5-year paper, was really strong. And 2/3 of the issue was purchased by indirect bidders, which is foreign accounts. So what are foreign purchasers doing? Are they betting against our growth going out beyond a 2-year window? It's really hard to figure, and that would explain why the president is going so hard after tariffs while the iron is hot, and why Jerome Powell is going after interest rates so hard while the iron is hot. Maybe both of these guys know we have a window where we have to act and get it done.
Ooh, Stephen, as we say, I like it. All right, maybe we'll bring up this topic next week with Chris Versace on Street Smart.
He'll be in our rearview mirror by then.
Sure will. All right, so we'll see you then. Thank you so much for doing an interview with me today, Stephen.
Thank you, Olivia.
See you on Twitter, guys.